Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to hover around the key level, which is the 60-day simple moving average, or the SMA, seen around 65.90 to 66.15. We can see that at least 8 attempts at this level has been rejected. Nevertheless, the market is still holding somewhat positive in terms of the fact that the indicators are improving. If we see a clear break above there, should give further indication towards 66.65 as a target and then on towards 67.20-25. Looking ahead to this week is a huge economic data which reveals the Australian CPI, the US FMOC rate decision, and also the US non-farm payrolls. Meanwhile, on Friday, markets received an update on the monthly PCE data, which is the US Federal Reserve's preferred gauge of core inflation. The latest data from the Comments Department Bureau of Economic Analysis showed that the PCE price index rose by 0.2% in December, which is the lowest level since 2021. This follows a decline of 0.1% in November, which remained unchanged. In the 12 months ending in December, the price index for the PCE increased to 2.6%, matching the previous report gain in November. Any pullback should find support for the Australian dollar around 65.45 and the base holding at 65.10.15. In the euro, we can see much bullish divergence, increasing the price action that should eventually see a snap to the upside. This would generate a price movement to 109.25 and once cleared on towards 109.65 to 110.45.55. Any pullback still expects to see good demand from 108.35.45 as the dollar index, which measures the greenback strength against a basket of 6 major currencies, holds around 103.48. Dollar yen once again looking to test that top side level around 148.55.65, but after many attempts did fail. At least we can see from the rejection from the Japanese candlesticks, and therefore may eventually again see this topside challenge eventually be exhausted and pull back towards 147.80 and then down towards 147.35. I still anticipate the move towards 145.80 as a broader target and reassess from there. Sterling, well, the market still whipsaws in this very much tight range and respects the support area presently at 126.10.15. In light of the pattern, I'm not ruling out the market can actually eventually climb higher and clear 128 figure 30 and on towards 130 to 31. All eyes on the Bank of England this week, which is widely expected to maintain the interest rates around 5.25%. Gold was a little bit weaker and still hovering around the 2020 mark. Overall, though, we may see a little bit more weakness into this week, but I feel the market may find support around 2000. We should not rule out a bounce from there, as we could see a rise up towards 2040 to 42. Wrapping up with oil, well, the market was cheering as the bulls now reached its objective of $78 a barrel and possibly seeing a little bit more extension towards this rally, given the inverse head and shoulders, anywhere up to 81 to 83. Presently, though, we may see a little pause due to the overbought conditions, but the trend is still strong from the ADX, so any pullback likely to be shallow and find support around 76.35. Well, that's a wrap for the start of this week. Thank you for joining me, and as always, look out the intraday report. I hope you enjoy the rest of the day.